All right, welcome back to the channel. We got a short video for you. I'm going to give you 5 stocks that I am bullish on, and these are long-term holds. These are not trades. I have no crystal ball. I have no clue what the economy is going to do or what the market will do, but we'll get into those 5 stocks in just one moment. So real quick, I've got the NASDAQ pulled up, and you can see we are just ripping. We just broke through all-time highs a few weeks ago, and we're chugging along. So you're going to hear a lot of stuff where, oh, we're due for a pullback, which we probably are. But once we pass all-time highs, we could still roll for a long time, just like we did back here in COVID. So we had the COVID crash, and then we got up to all-time highs. Once we broke that, took off. So you kind of see that a bunch of times. Even right back here in 2018, we had a big crash. We recovered, got past all-time highs, little pullback, and just took off. So who knows what the future is going to hold when it comes to the economy and the market as a whole. Our job is to either dollar cost average in our 401ks and own the baskets, or you can pick individual stocks within those baskets if you do your homework and feel confident in those stocks, and hold them throughout the turmoil as long as the story stays intact. Just because you like a stock and the economy goes down doesn't mean you should sell the stock unless the story for that company changes. I hope that all makes sense. So with that, I got 5 stocks. We're not going to go into the pros and the cons. We're just going to talk about these 5 stocks that I'm going to be purchasing. I have been purchasing, and I will continue to accumulate. So there's 2 of them that are new. The other 3 we've talked about, and I already have videos on. These other 2, I will make videos shortly. So let's get into the 2 newbies. They're newbies, but we all know them. First one here, Apple stock. I like Apple. There's some negativity around the stock due to their headset and them not making cars and whatever else drama's going around. Apple's no good anymore. They've lost their luster, blah, 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 blah. So in one portfolio, I opened up a starter position, and I will continue to add. I didn't buy any today, but today would have been a good day to buy some. In the 160s, I really like. So I've got this green box down here. To me, that's a great purchase. Now, we could come all the way down to 130. I have no clue. But the story is strong here with the company. They went from 90 billion in one quarter up to, and you can't compare quarter over quarter because this was holiday season, but their last quarter they had 120 billion in revenue. That's pretty good. So Apple, we all know it. We all use it. Some people love it, some people hate it. But I do like this pullback. And the reason I showed the NASDAQ is because we're at all-time highs. Now, I personally have a hard time buying things that are all-time high unless I really like the company. So for me here, instead of buying the basket at all-time highs, which I will in my 401k and dollar cost average in the Qs, but instead of that, I'm looking at what are some of the pieces of the basket that are lagging the market and that I can make some long-term positions in. So that's why I bring you Apple, because it's in the basket, it's in the NASDAQ, but it's not at all-time highs like the NASDAQ. And I bring you Google. So Google, really like the stock, really like the company. A lot of good stuff with YouTube, streaming, Gmail, search. There is a potential for search revenue to decrease over the years. We'll have to wait and see. Now, Google is getting hated because of political drama. And they kind of had a big blunder on their AI release. Now, these are easy fix. The question is how will they fix it, and what will the perceived brand damage be? So this reminds me a lot of a Target, a Disney, a Bud Light, things like that. Big companies that made mistakes, that angered some people, and the stock took a hit because people don't want to be involved with the drama. So anyways, people are still going to watch YouTube. People are still going to use Gmail. People are still going to use search. The question is how much brand damage will be done here, and when does the stock end? So the stock slide end. So if we look at a stock like Meta went through hell. And this was brand damage, government suing you, Zuckerberg changing strategy, all these things people didn't like, and it got all the way down to $89, something like that. Look at it since when it made the changes that the market liked. I mean, that's unbelievable. I'm not saying Google's going to get down this low, but if it does, you better be keeping an eye on. So Google's number 2. I did start a position in that again on Friday, and I did purchase a little bit more today. It is a little scary if we kind of break this support because we're still in a trend up here. But if we break below this, we're breaking trend, and look out below. Google was a great buy under $100. And funny thing about Google is I had a big position in Google, and last year I got out of Google and got into Amazon for that position, which was a great lucky switch. Because we're going to look at Amazon. Amazon, super strong, super strong, and I think we blow right through all-time highs some point within this year. I don't know when that will be. I drew this arrow a long time ago. I think we get right through that without a doubt, without a problem either. Not financial advice, do your own research, yada, yada, yada. So last quarter, Amazon, $169 billion in revenue. Let's take a look at Google. Last quarter, Google had $86 billion in revenue. So these are phenomenal businesses. And both Google and Amazon are going to get a lot leaner when times get tough eventually. So they have a lot of fat to trim so they can have a lot more profit for all that revenue. So we all know Amazon. I haven't bought Amazon in a while, but 175 doesn't seem outrageous for me to buy some more. Now again, it's not at all-time highs. It's harder to buy when things are high than it is when they're low. It's easy to buy low, sell high. It's hard to buy high and buy more higher. That's harder to do. Or buy low and buy higher. That's hard to do. Average up. At least I have a hard time doing that because I want to find deals. I want to find things that are undervalued in the market. So, moving on. We've talked about Enphase quite a bit. Enphase is a great company. Now, it's gotten punished, and it rightfully so. It should have never been up in these stratospheric levels. And when we look at the price at where it is today, you'll see why. So, its revenue has gone from 400 million, 400 million, 500 million, 600 million, 700 million, 700 million, 700 million, 550, 320, and they're guiding for 280 in revenue. Very cyclical. Earnings are free falling, which is why the stock is free falling. The stock will lag or lead its earnings. It'll follow its earnings and revenue. So the question is on Enphase is, have we bottomed? But long term, this is not going anywhere, and this is one of the winners in the solar industry. Me personally, I am looking to buy more around 100, 105. It just kind of depends how things go. If Enphase is at 100, I'm going to look at those other 3 stocks that we talked about and the next one and say, out of these 4, these are the 5 that I'm buying. What are the prices? Which one do I want to add to or build a bigger position? If Amazon's $100 and Enphase is $100, I'm buying way more Amazon than I am Enphase, if that makes sense. But do what's best for your portfolio and for your position. The next one we've talked about Tesla. Now, what the heck happened today? So Tesla was looking like we were chugging out of this little earnings dip. We filled the gap here from earnings, and then boom, someone dropped the hammer. So that does not feel good when you're super overweight Tesla like I am. But this one is similar to Enphase. Not that the earnings are going down, but the margin, the profit margin is going down. Tesla's last quarter was 25 billion, and they're guiding for 25 billion. There were some China numbers that came out that were soft, and they blamed it on a holiday in China, which sounds like some garbage to me. Just be straight up. I mean, you're selling less cars than you did last year. China's economy is in a free fall, so that's not out of the question. But to blame it on, Chinese New Year seems kind of lame to me. So the question here with Tesla is how much more brand damage, how much more, hate is there going to be for EVs and for Tesla and Elon? And there's some questions that are coming up with Elon having to possibly sell some more shares, which that's why we saw this huge selling pressure here was Elon selling shares to buy Twitter. So now if some of the banks are saying, you need to sell some more Tesla shares to cover your Twitter money that he borrowed, that wouldn't be good either. So we'll have to wait and see what happens there. I have been buying recently. I'm taking a pause just to see if we can recover, but I will be buying more, most likely in the 170, 165. I'll do another dollar cost average there, and then we'll see from there. But I still think we're bouncing around in this trend between 220 and 150. I could see us kind of bouncing around in here. Once we get over this red line, that'll be some good news. But you can see we zoom out even more, we're bouncing around in this downtrend. But again, Tesla had such a crazy run here. They pulled forward so much of the stock growth within a couple years that it's only healthy for it to kind of bounce around here before it gets its footing and moves back up into the 300s, 350s. But for me, this is a long-term hold. But I'm not denying that there could be some harsher times coming up, which is why I'm hedged for this position. It's not a full hedge, but if Tesla stock goes down 10%, maybe I make $1. Or goes down $10, maybe I make $1, is what I meant to say. So those are 5 stocks I'm looking at. And we got a big speech this week with Jerome Powell. Real quick, I think he's going to come out and say we don't need to cut rates anytime soon. Economy looks strong. And I don't think the market will love that. But again, I don't know. I'm looking at good companies to own for the long term, and whatever happens macro, that's fine. But it's always a good idea to have some cash on hand for when you have a day like today. If you want to buy Tesla and it's down 7%, you can nibble a little bit. So that's all I got for you for today. I am not dollar cost averaging into the semis right now, just because it's unbelievable. So I'm going to wait for this space to cool down a little bit. I love the space. I'm going to continue to hold, but I have a hard time buying tops. Maybe that's a fault of mine. So I'm going to look at some of the other stocks that I like that aren't at all-time highs, and that's what this video is about. So if you like it, hit the thumbs up, subscribe. Until next time, friends, peace out.